Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So last videos, 4 chapters I have completed on accounting for CA Foundation. In this video, chapter number 5, that is accounting policies, that I'm going to explain in this video. So last 4 chapters I have completed. First, theoretical framework. Secondly, accounting concepts, conventions. Third, capital expenditure and revenue expenditure, and the last video, contingent assets and contingent liabilities. These are the things so far I have completed. Now in this video, very important theory topic, that is accounting policies. In this video, I'm going to explain you what do you mean by accounting policies. What are the factors to be considered while selecting the accounting policy? Under what circumstances the accounting policy can be changed, and what is the effect of accounting policy on the financial statements? That's what I'm going to explain. So watch the video till the end. Don't skip in between. If you have not watched the earlier videos, I suggest you go to the playlist of my channel. Select the subject accounting for CA Foundation. Watch all the videos, be perfect and have confidence on this subject of accounting. Take the screenshot of the points which I have written, then I'll explain every point in detail. Now, first of all, what is the meaning of the term accounting policy? So, accounting policy refers to specific accounting principles and the methods of applying those principles by an enterprise in the preparation and presentation of financial statements. So every business will make the financial statements, that is profit and loss account and balance sheet, to evaluate the performance and to find out the financial position. So these financial statements will be prepared by following some accounting principles and methods of applying those accounting principles, that is called accounting policies. Accounting policy will have a big impact on the understandability of the financial statements. So very carefully an enterprise has to select the accounting policy. Right? Now, accounting policies are based on various accounting concepts and conventions. In the previous video, I have explained you accounting concepts and conventions. These are the assumptions, conditions on which the accounting is based. So here accounting policies will depend on the concepts and conventions. There is no single list of accounting policy which should be applied by all enterprises. We cannot say this is the only accounting policy which must be applied in all the situation, all the enterprises. No. Every enterprise, the nature is different. The circumstances is different. So we cannot make a general accounting policy which can be applicable in all circumstances. As the business conditions change, the accounting policy must also be changed. So there is no single list of accounts which are applicable. Enterprise operate in diverse and complex environment situation. So every enterprise is operating in a very complex environment, difficult situation. In those situations, they have to implement their own accounting policy. And so they need to adopt various policies. The choice of specific accounting policy appropriate to the specific circumstances in which the enterprise operating calls for considerable judgment by the management. Finally, it depends on the judgment of the management that which accounting policy is very much appropriate for our purpose, for our business, so that the financial statement should show a true and fair view of the state of affairs. So it needs very careful judgment by the management to adopt a particular accounting policy. Now, ICAI, Institute of Chartered Accountants of India, has given many guidelines, accounting standard, so that the accounting policy should be minimum. If we have more number of accounting policy, it will be difficult because every enterprise will adopt their own policy. We cannot be able to compare them. Comparison will be difficult if different organizations adopt a different accounting policy. So all the financial statements are unique one. We cannot be able to compare. That is the reason why ICAI, what IC has been trying to reduce the number of acceptable accounting policy by giving a guidance note or by giving accounting standard. They want to reduce the number of accounting policies. The areas wherein accounting policies are frequently encountered. Normally, in what areas there are different accounting policy? The accounting policy has to be selected. The areas are regarding valuation of inventories and valuation of investments. Particularly these two. Don't think that only these two requires accounting policy to be selected. No, these are only example. These two are the normal areas where different accounting policy may be adopted. Now, selection of an accounting policy. How to select? An organization, an enterprise has to select an accounting policy from different accounting policies. So, choice of accounting policy is very important policy decision which affects the performance measurement as well as financial position. Performance measurement means finding out the profit or loss by preparing profit and loss account. And financial position can be ascertained by making the balance sheet. So accounting policy very much affects the performance results and also the financial position. So this is very, very important. Then selection of inappropriate accounting policy may lead to understatement or overstatement of financial position. If you make it wrong, if you make an inappropriate accounting policy, what will happen? The profit may be overstated or the profit may be understated. Or financial position may be overstated or understated if you make inappropriate accounting policy. That's why if you want to make true and fair performance results and true and fair financial position, you should correctly choose the accounting policy. Now, thus accounting policy should be selected with due care after considering its effect on the financial performance of the business from various users of accounts. So the management has to be very careful regarding the selection of accounting policy because so many users of accounts are there. The users of accounts have to take the decision on the basis of financial statements. The financial statements should show true and fair view. That's why very careful judgment decision is required by the management in selecting an appropriate accounting policy. It is believed that no unified and exhaustive list of accounting policy can be suggested for all. We cannot give a universal formula that this is the only accounting policy or these are the only accounting policies available to be applied. No, we cannot give any generalization like that because every business operates in different situation. The nature of every business is different. The circumstances are different. Just like a doctor cannot prescribe the same medicine to every patient. The doctor has to see the different type of diseases, the different types of ailments, sickness. Accordingly, he has to prescribe the medicine. Same way, the accounting policy have to be selected considering the various circumstances. Three major characteristics which should be considered for the purpose of selection and application. Normally, three factors are given. By considering these three factors, a business organization has to select which is the appropriate or good accounting policy. The three factors to be considered are prudence, substance over form, and materiality. These three factors must be considered in order to select an appropriate accounting policy, right? Now, the financial statement should be prepared on the basis of such accounting policy which exhibit true and fair view of the state of affairs of the balance sheet and the profit and loss account. So, considering the prudence, substance over form, and materiality, the management has to select an appropriate accounting policy which should exhibit a true and fair result of the operations in profit and loss account and should show the correct financial position, assets and liabilities in the balance sheet. That the management has to keep in mind. Now, examples of selection, wherein selection from a set of accounting policy is made. Normally, in what areas there are different accounting policies available? So many exhaustive. We don't have exhaustive. We have unlimited areas where different accounting policies are available. But few among them are inventories. Normally, every organization may have inventories, inventory of raw material, inventory of finished goods, inventory of semi-finished goods, work in progress. So how to calculate the value of inventory depends on the accounting policy. So normally what will happen? Raw material. The raw material will be valued at the cost. Whereas finished goods normally will be valued at the lower of cost price or market price, whichever is lower. In the same way, the value of semi-finished goods, work in progress, will be calculated at net realizable value. These are the different, accounting policies available for inventories. And for investments, investment here means long-term investment. We are not considering the short-term investment. Long-term investment. The long-term investment should be recorded at its cost. At its cost, whatever is the market value fluctuation, it should be recorded at cost. But however, provision for permanent diminution in the value has been made wherever necessary. If the management see that there is a permanent diminution in the value of the investment, they should make a proper provision. One reserve, investment fluctuation reserve, should be made if it is necessary. So these are the accounting policies for inventories and investments. Now, changes in accounting policy. According to consistency accounting concept, once a policy is adopted, the same policy should be continued from one year to another year. The accounting policy should not be changed every year, but it doesn't mean that it should never be changed. No, it has to be changed. When, under what circumstances a business can change the accounting policies? Here two circumstances are given. It is required by some statute. Statute means law. If there is change in law, then we have to change the accounting policy also. Because we can't go beyond law. Whatever law says, we have to follow it. So if there is a change in the statute or law, then we have to change the accounting policy. Similarly, for the compliance with accounting standard, time to time, the ICAI will issue a number of standards on different topics, and every business must comply the accounting standards given by ICAI. So, in compliance with the accounting standard, we may have to change the accounting policy. The business does not want to change, but accounting standard has been issued. We have to comply the accounting standard. We have to change the policy. Similarly, there is a change in the statute. We have to change the policy. Lastly, change would result in more appropriate presentation of financial statements. Finally, this accounting policy will have an impact, a direct impact on the financial statements. And it is the objective that every financial statement must show the true and fair view. So in order to make better presentation of financial statements, if the change in accounting policy is required, then change the accounting policy. So if the management see that if we change the accounting policy, the financial statements may show portray the result, better portray the financial position. In that case, the management may change the accounting policy so that the financial statement should show true and fair view. So under these circumstances, the accounting policy may be changed. Change in accounting policy may have material effect on the financial statements. If we change the financial accounting policy due to this, then definitely it will have a big impact on the financial statements. Then, for example, if cost formula used for inventory valuation is changed from weighted average to FIFO. Earlier, a company is following weighted average method to calculate the value of the inventory. Now, current year, they want to change it from weighted average method to FIFO method. Definitely, it will have an impact not only on the profitability but also on the financial position. That is the impact of change in policy on the financial statements. Secondly, if interest is capitalized, which was earlier not in practice. Earlier, interest was taken as a revenue expenditure. But current year, they have changed the accounting policy. Now they are considering the interest payment as a capital expenditure. Then definitely it's the change in accounting policy which will affect the profitability and also it will affect the financial position. Now, all these may increase or decrease the profit. Whatever change we are making in the accounting policy, the profit or loss will get changed. Unless the effect of such change in accounting policy is quantified, the financial statement may not help the user of accounts. The financial statements are prepared for the purpose of using by different stakeholders. The different stakeholders will take the decision on the basis of financial statements. So, until and unless the change in accounting policy is quantified and shown in the financial statements will not show true and fair view. The user cannot take a prudent decision on the financial statement. That's why whenever there is a change in the accounting policy, it should be quantified and it should be reported in the financial statements that due to the change in financial statement, the profit would have been less or the profit would have been more. Therefore, it is necessary to quantify the effect of change in financial statement items like assets, liabilities, profit or loss. That's why it is compulsory whenever there is a change in the accounting policy, the management must quantify how much is the effect of change in accounting policy and what is the effect on the assets, on the liabilities and the profit or loss. That's all. This is the complete theory explanation of this topic of accounting policy. In examination, you may get a theory question regarding what are accounting policy, what are the factors to be considered in selecting the accounting policy, when the accounting policy may be changed, what is the disclosure requirement. So after watching this video 2-3 times, definitely you will get a lot of confidence in writing the question in examination regarding this accounting policy. So if you are satisfied, give a like to the video, share my channel among your friends, among your group so that more students can watch the video and clear the CA Foundation exam in the first attempt itself. Not only CA Foundation but also for CMA Foundation or CS Foundation, the same is applicable. And subscribe my channel if you have not yet subscribed by the super thanks which is given below my video. Inshallah, we'll start the questions on this accounting policy in the next video.